Good afternoon and welcome to Bull Market Stock Show. Today we're doing actually the FOMC meeting that was yesterday at about 8 o'clock. It's funny, on the basically on the Forex calendar, I think it was Forex Factory that I looked at, and other calendars, it didn't show actually that it's important, but it was important because actually a few minutes after the Fed released their minutes, the market started to go down, dollar strengthened, NASDAQ, the oil prices, commodities actually basically went down. Bitcoin of all things actually holds steady during that time. And it was a thick statement, so you have to read quite a lot through it. And I actually read the statement, but obviously you all know there's always someone or people that read the statement quicker and then start to bloody sell off the thing. So when I actually was looking back, and then the thing was actually pushing downwards. Now, there was actually a bit of a clause in this whole entire spectrum. Now, this could affect everything. It can affect actually the commodities, the Bitcoin, cryptocurrencies, currency markets. So listen carefully on this one. Now, they did say they will start to taper if the economy improves. Now, that if is actually the big thing there. So if we see positive data coming through from the United States, now mainly that is now according to the data, or I would say according to the mandate of the Federal Reserve, that is now based on their job numbers and also inflation pressures. Now, the word if is a big thing there in that statement. They will start to taper if. Now, taper means actually that they will print less money. So they will decrease actually the printing money. So we need to be cautioned basically on the data that is released now from the United States. That is now in the mandate of them. That is now their job numbers and also their inflation pressures. Now, I'm not sure basically much on the job numbers. Now, today there's job claims that will come through. I don't know will that have much of an impact, but it's an indication of how healthy the labor market is in the United States. But on the inflation pressure side, or the inflation expectations actually, there is actually a lot of actually research that has been done by the different universities in the United States. Some have the inflation expectation at 4. The Federal Reserve has inflation expectation of about 3.7. Others have it at 3.4. But all of them actually were over 2% and far over 2%. So they said that the future of inflation in the United States will be actually a bit sticky. Now, that makes sense because of the supply strains that is currently happening, robust spending that happened, I think, last month. And so obviously that actually, or previous month, sorry. So that actually had a bit of a supply strain problem. Now, I'm just not sure will that actually translate into jobs because of the supply strain. Because obviously, if products needs to sell quicker, then obviously you need to employ more people so that you can produce the products quicker. So that means that you need to actually employ people. Then on the other hand, there is also the job claim story, or I would say the job insurance. In South Africa is known as the UIF, but they unemployment insurance, sorry, that actually makes people a bit lazy. I mean, you get paid for laying at home. So obviously you will have a point if you go to your job and say, listen, yeah, I want to earn so much, because obviously you have backing of a good wage by just laying at home. So that could actually lead to other problems as well. But the NFP, next month NFP will actually be a big number, because also on the FOMC will release actually a statement and have a conference that is now in June. So that number of the NFP will be a big number for them to start to talk about tapering the whole thing. Now, the other thing is also, will the inflation be healthy or will it be bad inflation? Because obviously, if the job numbers don't improve, but inflation is going up, so that means the inflation is going up because people are just spending because they get free money. So that is actually bad inflation. But if the job numbers improve and inflation goes up, then the Federal Reserve have a case to say, okay, we need to start to taper. So that makes more sense. But in the short space, that makes it now trading a bit difficult. Your day-to-day trading, that makes it a bit difficult. You could see the market were actually retracing today. I think personally, I didn't give signals out today. I said to them, to my traders, listen, rather wait until, excuse me, excuse me, rather wait until 4:30 when the US market is opening, and then actually we can maybe see if there's trading opportunities. Because I was a bit unsure, because as I saw this morning, it was just basically a decent retracement in gold and Australian, the euro, and all of those other currencies. But the commodities, the oil and gas, that was in the red. So that gives me a bit of a bad feeling to say, I'm not gonna enter in here. You don't have to trade every day. If you're unsure, like what I did this morning, I didn't go in with a trade. So we will rather see for more clarity at about 4:30. But for me personally, because of that statement of the tapering thing, you see, if you compare the United States with other central banks, now there's only two central banks that I know. That is now Canada, and then you have the United States now that made that comments yesterday. Canada was scaling back. They said, listen, yeah, they're going to reduce their QE program, bond buying program, because they need to pack it away for another crisis. And the second one is now the United States that were saying, listen, yeah, we will start to talk about tapering if we see more improvements in the economy. So at least there's a bit of a debate that goes actually on. So that is actually important. That word alone, to say they will start to talk about tapering when it comes to in the next meetings, that makes sense. Now, on the others, Australia, New Zealand, Britain, the European Union, none of them actually were talking about tapering. All of them were talking about they're going to start looking at reducing tapering in 2024, or maybe never, if they can't get to the inflation trajectory. So the only two countries or central banks that are talking in the right direction is actually United States and Canada. So that words alone, to say that there's an option of tapering, that for me says that there might be a bit of dollar strength that will come through. And because the market was retracing today, I see it did absolutely nothing. Like, for example, Australia was sitting at 0.775, I think, and gold went a bit up, but not so convincingly. And then you have the commodities, other commodities that was in red. So that for me says for me it was just a decent retracement, and I think the dollar will actually starts to go stronger. Even the NASDAQ, for example, it was reaching the 13,000, below the 13,000, maybe just carving the 13,000 mark. And I think personally, it retraces back. I think that is just a retracement. I think as things stand, because the Federal Reserve is talking about tapering, then I think that can go lower, below the 13,000 handle. That is now if the dollar start to pick up because of those words, and which I think the dollar will pick up because of that words. Unless there's data coming through to say that there's not good, the economy is not doing good in the United States, then yes, we can scale back. But it will be a very choppy trading environment until June. Excuse me. I can tell now it will not be a pleasant trading time until June. It will be very choppy, because if data come through in the United States that is bad, the market will be a bit unsure. Will they need to sell the dollar? Will the Federal Reserve hold on with tapering? Sorry, hold on to the tapering stance. So it's a bit difficult, because you need to look at the data. Then you can make your decision up to say, okay, the Federal Reserve will scale back or so, but then you still have the doubt in your mind. So it will be very, very choppy. I think there will be some dollar strength coming through, maybe today, tomorrow, but I will not say something that you can bank on that the market will reverse back because of that statement that was through, that came through yesterday. So just be careful when you open up trades. I think your best option is, if you see profits jump out check your trend lines, maybe to see, okay, that is where it will go on your 4-hour chart or 1 hour chart. And then you jump out of a trade if you see the green, because it will really be choppy from now on until NFP, and then also when the Federal Reserve releasing that statement. But because data can disrupt your trade if there's bad data coming through, or even strong good data that comes through out of the United States. So it's going to be a bit of a difficult one, but it's going to be choppy. So please be very careful. But I think dollar strength will maybe come through later today or tomorrow because of that statement that was released yesterday. But please be careful. It's going to be choppy until June's Federal Reserve meeting, and also the NFP that will be the first week of next month. So all of the best with trading. I wish I had better news from the FOMC statement, but it was a bit up and down news yesterday. So that is it from my side. Hope you guys enjoyed today's show, and then I will see you guys again tomorrow at the same time at 1:30. Bye-bye.